Story forward with a CV financier. We're talking about Shriram Transport. To discuss this in greater detail, we're now joined by Umesh Revankar, the MD of Shriram Transport. Good afternoon, Mr. Revankar, and thanks so much for joining in. We spoke to you very recently, and at that time you indicated that the demand is very good and you're confident about maintaining your AUM growth at 18 to 20% this year compared to the prior year. We just heard Ashok Leyland's Mr. Dasri, where he's indicated a 30 to 40% growth in the CV market for next year. Is the demand outstripping, your own expectations compared to the start of the year? And give us your projections, not just for this year, but even for the next year.
See, my expectation is that the overall sales growth should happen from September onwards, when the demand for mining and infrastructure activity will be very high. So the heavy vehicle demand will start from September, and it could be in a double digit, 15 to 20%. And the sale of a smaller vehicle, that could really go very high, mainly because what happens is when the heavier vehicle gets launched, the redistribution vehicle demand also will come, but it will come at a lag, maybe lag of around 6 months or 1 year. So I think the smaller vehicle number will grow much faster, and it could be around 20%. So since we are basically in used vehicle financing, and incidentally we finance new vehicle also, we expect around 20% growth this year, and next year also we expect strong demand. I probably say that around 20% growth next year also. And that should be coming from both urban and rural markets.
Right, Mr. Revankar, you had joined us earlier and you said there was a bit of a slowdown in Q2 for new vehicles. Yes. That's a seasonal factor that's playing out, or was it because of other reasons?
No, it's only seasonal factor in July and August.
Okay.
And also the other factor is the confusion on the axle weight ratio.
True.
Which there was no clarity in the beginning, and there were some suggestions that the manufacturers may have to redesign their vehicle and then only they'll be eligible. So we felt that if there is a time taken by manufacturer to redesign, there could be some delay. But now customers are not really looking at redesigning, and I think the existing vehicle also will be able to take that additional load. So I feel there should not be much disturbance in the demand, but the seasonal factor of rains will play on this mining and infrastructure segment.
Okay. Given the demand is so strong, does it leave you with more pricing power? Will you be able to pass on the entire cost of borrowing to your customers? The last time when we spoke to you, you said the cost of borrowing has gone up by 50 basis points, or there have been 50 basis points of rate hike, but the lending rate from your end has only gone up by 20 basis points, which means up until now you could not pass on the entire amount. Now the demand is looking so good. Are you more optimistic you will be able to pass on the higher cost?
See, as of now, there is not much of increase in our cost of borrowing. We expect for the year, next year, if you look at, there could be some increase in the cost of borrowing, which we would be able to pass on to the subsequent contract. So if you look at Q on Q, first quarter to previous quarter, then our cost of borrowing has gone up only by 5 to 10 basis points. So we did not have much challenge in the first quarter. But going forward, by looking at the way trends are, there could be increase in borrowing cost, and which we will be definitely pass on, because when there's a strong demand, then definitely the customers would be able to pay if there is a good income for his business.
Okay, Mr. Revankar, you are telling us that demand is strong. We heard earlier today as well, the management of Ashok Leyland, they upped their guidance as well. Possibility of you outbeating that 20% that you're talking about? And also, what is your cost of borrowing, if you could give me the exact number?
Our cost of borrowings is around 9% now,
okay.
Including the wholesale and retail. Okay. And we expect it to go up by around 20 basis points. And demand, yes, if there is a strong demand, then we will be growing. We should be able to grow beyond 20% also.
So there's a possibility.
There is a possibility because we have built infrastructure. Our infrastructure network and the number of branches we have added to 70 in the last 1 year. This should help us to manage the volume.
Okay, so minimum 20% AUM growth for your company in FY19 and 20. One final question then from my end. What could be the extent of asset quality improvement for you?
Asset quality improvement should be 50 basis point overall if you look at IGAP, because we now need to look at the numbers on IGAP. As on gross NPL around 50 basis point, we are very confident. On credit cost per se, again, we expect around 40-50 basis point on the credit cost.
Okay, and this is by end of FY19?
Yes, by end of FY19.
Okay, all right. Thanks so much, Mr. Revankar, for joining in and